Welcome to the Deep Dive. Today we're really digging into Eli Lilly and Company, the pharma giant that's been making so many waves.
That's right. We've got a mix of sources lined up: history, financials, the latest buzz, and even a classic valuation approach.
Our goal is to unpack what's really behind their amazing growth, see what the market thinks it's worth, and figure out if it makes sense for your portfolio right now.
And what's really interesting here, I think, is seeing this super advanced science kind of bump up against some old school financial ideas.
Yeah, we'll definitely get into why everyone's talking about Lilly, especially those big drugs, Mounjaro and Zepbound. But here's a twist. We ran the numbers using Benjamin Graham's old school method, and, well, the result might surprise you. It points to a real gap between tradition and today's market excitement.
Definitely something to chew on.
Okay, so let's maybe start at the beginning. Colonel Eli Lilly, 1876, just focused on making reliable medicine.
Right. And then you fast forward generations of innovation. Insulin discovery was huge for them.
Yeah.
And by 1953, boom, they're a global company. It's quite the story.
It really is. And it wasn't just luck, was it?
No, not at all. They consistently poured money into R&D, made smart strategic moves. Like, remember when they sold off their animal health part in 2019?
Elanco, right, yeah.
Exactly. That let them really focus, specialize. And it paid off.
Mm.
By October 2024, they were the most valuable drug company, period. $842 billion market cap.
Just incredible numbers. And the revenue backs it up, too. What was it, $19.6 billion in 2014?
Uh-huh.
To over $45 billion in 2024. And then Q1 of 2025, a 45% jump year over year.
Mostly Mounjaro and Zepbound driving that, yeah.
So how do they even keep up with that kind of demand?
Well, that's the key question, isn't it? They've been spending big, over $23 billion just on manufacturing capacity since 2020.
Wow. Trying to catch up.
Trying to meet that surge, exactly. And look at their profits gross margins, around 82.5% in Q1 25. That's really strong. Plus, they've raised their dividend for, 46 years straight?
It's an impressive track record. Okay, so the drugs are hot, the money's rolling in. But what else is cooking? The pipeline must be key.
Absolutely. Beyond the big two, they've got this oral GLP-1, orforglipron.
Right, the pill version. GLP-1s being those powerful diabetes and weight loss drugs.
Yep. Phase 3 trials just wrapped successfully. Could be submitted for approval maybe by year-end 2025.
And the Alzheimer's drug, Kisunla?
Just got an updated FDA label in July 25. So, yeah, the innovation engine is definitely still running.
But it's not like they have the field to themselves.
Oh, definitely not. It's fiercely competitive, especially that GLP-1 market. They're head-to-head with Novo Nordisk.
Even though Lilly's data looks, well, arguably better.
Yeah, Lilly often points to superior efficacy, but Novo Nordisk still actually has more market share right now. That's a major fight playing out.
Okay, and speaking of fights, the insulin pricing issue, that hasn't gone away, has it?
No, it's still a factor. Lilly faced a lot of lawsuits over claims of artificial price inflation. Prices historically shot up like 600% to 1,500% over 20 years.
Crazy numbers.
Yeah. Now, to be fair and impartial, Lilly has taken steps. They cut prices, capped patient costs at $35 a month back in March 23.
Okay.
And they've settled some cases, like a $13.5 million class action. But it's still complex. As of July 2025, there were still like 417 lawsuits pending.
So it's still an overhang, even with the price cuts.
It is. Definitely something to keep an eye on.
All right, so we have this picture. Amazing growth, strong pipeline, but also tough competition and these lingering legal issues. How does this all shake out for the stock price? It's up, 1,670% in 10 years?
Yeah, the run-up has been just phenomenal, from around $43 in 2014 to over $760 in July 2025.
So is it too late? Is all that good news already baked in?
Well, that's the multi-billion-dollar question, isn't it? When we use that Benjamin Graham formula, the classic intrinsic value calculation.
So they're looking at earnings and projecting growth.
Exactly. Even being generous, say, using their current EPS of $12.29 and projecting a pretty strong 15% long-term growth.
Okay.
The value comes out around $430.
Wow. That's way below the $760 market price.
Significantly lower, yeah. So by those traditional measures, it looks overvalued. It tells you the market isn't just pricing in current earnings, it's pricing in massive future success, maybe multiple blockbusters down the line.
A huge bet on the future, then.
A huge bet. The current price has enormous growth expectations built right in.
So for you, the listener, trying to make sense of this, Lilly is clearly a strong company, great science, good financials.
Fundamentally solid, no doubt. But that valuation is, well, it's steep, It demands near-perfect execution and continued major breakthroughs.
So maybe caution is warranted for new investors.
I'd lean towards neutral, yeah. Maybe watch for pullbacks if you're really keen. It's definitely priced for perfection right now.
Okay, so here's something to think about. In this era where science is leaping forward like crazy and markets get really excited, how do you personally balance that incredible potential you see in a company like Lilly with those timeless, maybe more cautious value investing principles like Graham's? Something for you to ponder.